Okay, traders, let's take a look at the AUDUSD. We're going to go through a top-down analysis of the AUDUSD, starting on the weekly time frame, moving down to the daily, 4-hourly, and hourly to find any possible trading opportunity this week on the AUDUSD. So, firstly, we've had obviously a bullish move to the upside. Markets turned higher. We've had the stochastics RSI and momentum favoring the bulls through here. We've had a rally from 61 cents all the way up to 68 cents over the past month. Now, the last week candle was a doji, or we can call that an inverted hammer candlestick formation. So that does indicate indecision in the market. Okay, we had another one at the start of the negative trend line over here. You had obviously a similar candlestick formation back here as well, and also another one back on the 10th of January 2022 as well. So these doji candlestick formations or inverted hammer candlestick formations at a major resistance level can indicate reversal opportunities, or at least areas where there could be corrective pullbacks. So if you was a day trader or a trader on the AUDUSD and you are long on the AUDUSD, this would be an obvious place where I would be taking profit for my first position. We've got obviously the previous support level coming through here, and now acting as a resistance level. We've also got this negative trendline resistance coming into play. We had a breakout of this on through here as well. So, this would be a fairly obvious area where I would look to be trimming down long trades if I was, a short-term trader in the market or a swing trader in the market. What you'd now be looking for is possible pullbacks or even possible shorting opportunities on the AUDUSD over the short term. So, if you go back a couple of weeks to a FOREX weekly wrap that I did on the currency market, you would know that we were favoring a move higher on the AUDUSD, pushing out of this negative trend line. Okay, so we're looking at this breakout coming through here. We've had that big impulsive move higher now. We now need to wait to see what's going to happen on the DXY before the next big move in the market. So the weekly charts are showing major resistance, and you definitely don't want to be looking to buy at these levels. We want to be looking for a different opportunity. We can see the stochastics RSI is obviously moving relatively high. It hasn't turned down just yet, so that still favors a bit more momentum higher, but it could be running out of steam in the short term. Let's go down to the daily time frame. So we'll just tidy up our charts. Again, we can see RSI or stochastics RSI is obviously favoring a change in momentum. We can get obviously this coming back higher again as well. It may trade in this range for a while if the AUDUSD does continue to consolidate or move higher. Nothing major through here. I wouldn't say this looks impulsive. You can't really get 5 waves down here, which indicates a change in trend. It looks probably a similar structure to the one coming through here. All right. So still, this could be corrective, and I'll show you why I think there's a chance that this might be corrective. If we go down to the hourly time frame for the time being, our Elliott wave count would suggest that this might be an ABC correction, so an A, B, C coming through here. And the final move higher on the AUDUSD might be incomplete. So we may have one final hurrah, one final push to the upside to complete this 5-wave sequence. Remember, a C wave always has 5 waves. So we need to have a 1, 2, 3, 4, 5 through here to complete that wave C. Okay, this is very choppy through here and even through here as well. So it's quite difficult to find a 5-wave rally just through here. So that's leading me to believe that is an ABC corrective rally for wave A. All right, so you've got an A coming through, B wave correction, C wave rally through here. Okay, you may even be able to count it where you've got an A, A, B, C down through here, and then coming up for a C wave for wave A. All right. So we might actually be able to move the B wave across one through here, then 5 waves in this small impulsive move here. Definitely 3-wave decline through here, so we know this is corrective, A, B, C. So it's just a waiting game, folks. We need to see if we get a final push to the upside on the AUDUSD, which aligns also with the Elliott wave count on the S&P 500. I will touch on that just now as well. So if we take a look at the recent move on the S&P 500, I covered the S&P 500 in detail last week, but again, we're looking at possibly an A, B, C wave rally higher before rolling over. However, this C wave through here only has 3 waves. 1, 2, 3, 4. We need a 5th wave top, and then we can start looking for short trades. Now, remember, the AUD/USD is a risk-on currency. It moves in a similar fashion, similar direction to the S&P 500 and the US stock market. The US dollar is obviously a global safe haven currency, and the Australian dollar is a risk-on currency. So if the market is trading in a risk-off sentiment, the AUD/USD will be a short trade of my choice, or the NZD/USD. So you'll be looking to go long on the US dollar. But for now, we're still yet to see a final push to the upside on the AUD/USD. Once we get that, I'll then be looking for possible short trades. Okay, so yeah, that's the AUD/USD. We've got obviously on the weekly time frame, we have some evidence that a possible topping formation is coming. We may get a final little push higher before rolling down. The hourly time frame is suggesting that we need another high in the market. You could possibly squeeze a wave 3, 4, 5, but that wave 4 would be relatively small compared to this wave 2. So not too, I don't like that count too much, but obviously anything can kind of happen. Similarly, on the GBPUSD, we have the same kind of structure. We've been following this for some time. We've got a 1, 2, 3, 4th wave triangle, wave 5 for a wave 1 or a wave A, 5 wave down for a wave A, B, C for wave B, coming down here for a wave C, then a 1, 2, 3, 4, hopefully a 5th wave rally to finish wave 3 or wave C. So, the GBPUSD would also suggest there's still one more low to come on the dollar index and one more high to come on US dollar pairings. Okay, so a weaker US dollar scenario. So yeah, a bit to kind of watch here. We don't like to go into the market on a Monday. Let's see how the market's trading tomorrow morning. On a Tuesday, we'll let the US market settle. If I was to make any kind of play in here, I wouldn't be going crazy, but there might be a long trade opportunity on 0.6730 on the AUD/USD, because this could either be an A, B, C down here, wave 1, wave 2, wave 3, 4, 5 coming up through here. So you can go long on the wave 1 top. Okay, if we get a break above that, the probability is that we're going to be heading higher towards that 0.6850 level or 0.69. Okay, so wait for support on 0.6728. If we get a break beneath this level through here, okay, we're coming very, very close. If we do break that low, I'll be watching for any break or breaches of the wave 1 high in here. So our bullish invalidation level is set at 0.6548. If we get any kind of low through here, we're going to have to reevaluate this count and go back to the drawing board. Okay, so for now we've got our 2 levels, bullish on support above 0.6731 and bearish and I guess reevaluating the count if we get a break beneath 0.6548. Okay, let's take another look at the DXY. We have been following this for some time. Over the past couple of weeks, we were expecting a big pullback on the dollar index from this major market cycle high at 114.77. So that has unfolded. We've seen this dollar weakness play coming through into the market. We were playing the pound USD, Euro USD, the metals market as well. We are now back to the drawing board, no open positions. We're just kind of waiting for price action. So, I just want to say one thing. So the dollar index has found a bit of support through here. it fell just shy of our downside target. So we were expecting one final move into this support zone before actually finding a bottom and then moving higher, either into a new bullish cycle or a corrective rally over the next couple of weeks. So, it's moving slightly prematurely, or I guess slightly early to the upside. It didn't quite tag the pitchfork structure either. So it didn't actually quite meet the, I guess that 10470 support zone that we highlighted. We've also got that kind of 200-day moving average coming into play as well around that. On a daily time frame, coming in around here as well. So it was slightly early, this bounce, but it's looking fairly convincing. What we now obviously want to see is whether the DXY is going to break that kind of area of resistance around 109. To me, that looks like it's going to be an obvious area to the upside where the dollar index may move. One of the reasons is because it could be a head and shoulders formation coming into play. Okay, we've had this breakdown, possibly got a neckline at that 105, 106 area. We may now have a shoulder line coming into play at 109.36. So it's also now the new resistance level. Okay, previous support now broken. Okay, coming through here. It's now the neckline. So we may get a corrective rally into this area, and then it may reject and roll down further. That's going to be very bullish for the stock market, for equities, for cryptocurrencies as well. So short term, we're looking for dollar strength to play out over the next couple of days. Shouldn't be too long, maybe a week. Okay, that could be on the daily time frame, 4 or 5 days going into here before rolling over. That also aligns with the weaker gold scenario that we're looking at in the short term. So gold's reached a major negative trendline resistance through here. We're looking for short trades on gold for the time being, back down into that 1700 area through here. That could be a inverse head and shoulders formation on gold. Okay, so we get a move down before we get a move higher. Now, I don't like making any big calls. That's obviously very bullish for gold. We're only going to trade the short term. We're only going to make short-term price action movements or trades. So, last week we took a small trade on shorting gold, took profit already. We're now looking for a corrective rally on gold to short back into. So if gold has an ABC correction, we can then look for short trades down beneath wave B, okay, for the longer target of roughly 1700, maybe 1690. So we're out of the market on gold at the moment, but we are looking to get back in over the next couple of days. So, a weaker gold play does align with a stronger DXY. Remember, gold and the dollar index tend to have an inverse correlation. That also actually aligns with our thesis, or I guess the structure on the AUDUSD. So the AUDUSD is indicating that it's reached a negative trend line. We may see some weakness coming into play over the next week or so as well. So yeah, short term, let's have a look and see how the dollar index plays out. We're looking for a bit more buying pressure coming into the market. We'll then obviously need to reassess to see how the dollar index trades around these highs. Is a bottom in for the stock market? Is a top in, a major top in for the DXY? It's going to be very interesting to see how this plays out over the next couple of weeks. Last week I highlighted that Michael Burry, the big short, has tweeted saying he's extremely short on the market. If he is correct and the market is going to roll over and head to new lows, then this head and shoulders formation isn't going to play out. We're going to see a breakthrough and a continuation to the upside. All right. So yeah, you've got to keep that in mind, and we've just got to keep playing the structures that we can see. And at the moment, what I can see is a weaker gold play, a stronger DXY play over the next sort of 24 to 48 hours. We'll then need to reassess when the DXY reaches the 109 resistance level. All right.